Welcome to the Gamma Brief. It is Wednesday, August 12th, 6:45 a.m. Eastern. Before we get started, here's a quick explanation for anyone new here. Gamma exposure, or GEX, is a measure of how much hedging pressure dealers have built up at each price level in the options chain. In a positive gamma environment, that pressure dampens moves. Dealers sell into rallies and buy into dips, pulling price back towards center. In the negative gamma environment, it amplifies them. Dealers chase price in both directions, turning small moves into trending sessions. The call wall, put wall, GEX flip point are where that pressure concentrates, shifts, and flips. Knowing which side of the flip you are on changes the question you ask before the bell. Not just where the market might go, but how it is likely to get there. This brief calculates all those levels from a single source every morning, the SPX 0 DTE options chain. Standard disclaimer, Gamma Brief is market intelligence, not financial advice. Let me know in the comments if you'd like to see something new or changed. Alright, let's get started. ES futures are trading at 7,768. Yesterday, the 7,700 put wall held as dealers anchored a constrained shop, exactly as we forecasted. But today, a fresh structural shift collides with a massive data drop. If the print ignites the tape, then the new mechanics will rapidly accelerate the breakout. We are entering day one of a negative gamma regime with net dealer exposure at negative $2.7 billion. Dealers are now net short options across the observable chain. There is no gamma flip within the observable chain to stabilize the tape. Dealers will buy futures on rallies and sell into weakness, amplifying directional moves. VIX is relatively contained at 15.39, but this structure is highly vulnerable. With CPI impending at 8:30, massive dealer re-hedging could rewrite the overnight regime before the cash bell even rings. The expected movement anchors to the prior close, projecting a 75-point range from 7,653 to 7,803. Overhead, the call wall sits at 7,800. The downside floor is the put wall at 7,650, which perfectly aligns with the expected move lower bound. ES sits 118 above put wall, 32 from call wall. Gap fade reprices floor to 78. Note that ES futures have already cleared R1 at 7,758, making 7,787 the first active resistance on the board. Overnight sentiment was dominated by a pre-CPI holding pattern and geopolitical caution, with oil catching a bid on Middle East tensions. Cross-asset action was muted. ES climbed roughly 0.25%, VIX edged up 0.72%, and the 10-year yield slipped 2 basis points. Sector rotation confirmed the macro caution as utilities added 1.4% and energy gained 1.3%, while communication services and financials lagged by over 1% each. Today's threat matrix is entirely concentrated at 8:30 Eastern with 11 high-impact inflation releases headlined by Core CPI. This is a 5 out of 5 calendar risk day. A beat or miss here fundamentally alters dealer positioning. The mechanics are asymmetric. An upside shock into an amplifying regime forces dealers to chase, accelerating any breakout. The environment is consistent with defined risk momentum setups. Selling premium here is picking up pennies in front of a steamroller. The environment favors defined risk directional structures, not income. A confirmed breakdown below 7,707 invalidates the upside thesis and targets the 7,650 put wall. The environment is actively amplifying momentum, but the structure remains provisional until the inflation data clears. Do not front-run the macro release. The data drops before the open, let the market show its hand first. Level set, bias defined, good luck out there. Standard disclaimer remains. Gamma Brief and GEX log are market intelligence, not financial advice. Options are high risk, manage your size, and trade your own plan.